CNBC TV18, celebrating 17 years of business leadership.
Welcome back to this monetary policy special, which is the first one after the government announced its demonetization policy or currency swap policy. We've been speaking to a bunch of bankers. At the moment with me are Ashish Parsati of HDFC Bank and V. Srinivasan, Deputy Managing Director of Axis Bank. Gentlemen, we are also joined by Neeraj Gambhir of Nomura. Before I start the conversation and the questions on permanent liquidity in the system, let's hear out what Deputy Governor Gandhi had to say when we asked him when will the withdrawal limits on deposits be taken off.
That is continuously, it is under review. We are monitoring the situation based on the supplies and based on the actual demand which has coming from the grassroots level. Constantly it is being reviewed. Exact date and other thing, that is difficult at this point in time to say, but every day we are reviewing.
Okay, now is this giving you, Srini, a sense that the withdrawal limits will be extended beyond December, because exact date and other things, that is difficult at this point of time. Did not say that December 30 is cast in stone. How would you react to that?
Now, I think there are two issues here, meaning you would raise the withdrawal limit. One is the withdrawal limit itself, and two is the availability of currency. You will raise the withdrawal limit only after currency is in adequate supply for people to withdraw up to this limit. Right now, even to this extent, the limit which we have, I think currency supply has been to some extent short, but people have not been able to meet their full demand. So I would think the currency supply has to improve to some extent or to a more substantial extent before they would review and hike the withdrawal limit.
Okay, so
and it looks like it could go beyond December.
That's your takeaway.
That's my, yeah.
Okay, is that your takeaway, Ashish?
Yeah, I would tend to agree with Srini, because the currency supply is the key rather than anything else.
Okay, now if you're not sure how much money will stay, will that affect your MCLR decision in January, or will the fact that you have, at least for the month of December, such a large amount of money coming in at 4%, will that affect your MCLR calculation? Should we expect a rate cut?
See, as I said, MCLR is based on your cost of funds, in the sense whatever is on your liability side.
Savings account is your cost of funds.
Savings account is, but even in savings and current account, banks are supposed to take the core portion of their savings account, current account, which they expect remains, for a longer period of time. So that's an estimate each bank will have to do of this, and it's very difficult in this, given that it's such a everything is in flux. It all depends on how much currency is available, what will happen to the withdrawal limit. So that's going to be a challenging thing. Each bank will decide what is the core portion of this, which you need to account for in MCLR. You can't take the whole thing, because definitely it's not core and it's transitory.
Okay, then just give me one answer for this. For the system as a whole, for the banking sector, how much do you think interest rates can fall in a quarter, or even for that matter in January?
So I would say, I don't have a number, but I would say anywhere, between, say, over the next 2 odd months, and I'm saying without a policy change, would be somewhere in the range of anywhere between 15 to 25 basis points. Is what I think would be for the system as well.
For the system. Srini, what would be your guess?
Now, I think when you look at liquidity itself, right, meaning if we assume the answer to the first question is possibly right, that withdrawal limits stay for a slightly longer period, I think the liquidity will also tend to be a lot stickier in the system for that much time. So if you factor that into account, I would think, closer to the higher end of the range, closer to 25 basis points.
Okay, that's exactly why I played that liquidity bite, because the withdrawal limits likely to stay will mean that there will be a surplus liquidity for a longish bit. Let me welcome Neeraj Gambhir into this discussion. Neeraj Gambhir, as a bond expert, what are your key takeaways from this policy, and how would you draw the tenure for the first calendar quarter of 2017?
So I think it looks like that it's a bit of a wait and watch at Reserve Bank's end to see as to how much is going to be the long-term effect of this demonetization scheme. Market was obviously in a particular mode, and this was not the result that market was expecting, so we've sold off about 20 basis points. We're currently at about 640 in terms of yields. I think that given the amount of liquidity in the system and given the fact that banks still need to make a reasonable amount of investments into government bond market, I don't expect a much bigger sell-off from here. I think maybe another 5-10 basis points, and we should see the investors sort of coming back to buy bonds. Over a slightly longer period of time, I feel that the market hasn't given up hope for a rate cut in the month of February. And I think if the inflation numbers continue to be surprising on the downside, then that hope will stay alive. So we will probably trade between 6.25 to 6.5 during this period. And if February also is a negative surprise, then I think the market will take a different course after that.
Okay. Well, I wanted your comments on the two issues I've been asking Srini and Ashish. What did you make of the governor's statement on dividend? Did it seem like the dividend is never coming because of currency swap?
I think it's a bit legal issue. We are very clear, and in fact I was reading some of the commentary that is coming out from the other experts as well. I think my understanding is that the government needs to take some legal step, i.e. coming up with an ordinance or some kind of a law in the parliament making this demonetization scheme as a writing off of currency liability in the balance sheet. Only once that is done, then can Reserve Bank actually think about doing anything with the reduction of its liability. At the current stage, with the way things are, it's not a reduction in the liability of the Reserve Bank, and hence the question of dividend is probably a little bit premature discussion. Okay. Also, you need to see as to what is the total size of liquidity or money coming back into the system.
Yes, that point is taken.
If that size is not very large, then maybe this is just a theoretical question.
Fair point. We'll do one thing, gentlemen. We have to take a break yet again, but we're getting a lot of comments from Delhi. So let's leave you with some of the reactions we got from key government officials. We are back with more questions to our panel.
This is a bold and brilliant call by the RBI. Bold because it goes, counter to what people expected. Both domestically and internationally, these are, times of unusual volatility and uncertainty. And therefore, this was a time to be, to ensure that there is some continuity and stability of policy. They also had to take into account whether these liquidity flows into the banking system, whether it's going to be temporary or more permanent.
Keeping the uncertainty in the international sector, the uncertainty around the US Fed rate, and the increased volatility and uncertainty in Europe also arising out of the Italian decision, the Italian vote to sort of go out of the EU. So with so much of external uncertainties and volatilities, and with some kind of a resistance to downward pressure on inflation, I think Reserve Bank has taken a decision to take a pause and adopt a wait and watch policy. One thing which the RBI projection brings out is that I think it counters the excessive negative outlook which is being projected with regard to GDP in various quarters. The decline in GDP has been projected much higher at much higher levels by several other quarters, and I think RBI projection counters that. But so far as Finance Ministry is concerned, going forward, we feel that it's a bit early in the day to take a call.
CNBC TV 18, celebrating 17 years of business leadership.